So Bitcoin recently crossed $20,000 per coin and broke all-time highs. At the same time, Bitcoin has a problem, but a brilliant one, which will affect the price in the coming months. So listen up, you are about to be bombarded with the news talking about Bitcoin. You're going to hear stories about how one Bitcoin will soon be worth $1 million. You're also going to hear how Bitcoin is one giant Ponzi scheme destined to collapse to zero. Neither are actually true. As someone who has spent just over 3.5 years working full-time in cryptocurrency, I want to break down the truth for you in this video. No hype, no exaggeration, just the facts. So I'm going to describe for you Bitcoin's brilliant problem. I'm going to answer your questions about whether you should invest or not, and I'm going to share with you the best investing strategy that you can use if you do want to invest. Anyway, let's get into it and let's talk about Bitcoin's brilliant problem. So in cryptocurrency today, there are 3 big buyers of Bitcoin. Number 1, PayPal. So in 2020, PayPal began to allow their customers to buy Bitcoin directly on the app or online. They mostly serve retail customers, so people like you and me. And PayPal route this through a cryptocurrency exchange known as itBit. This chart shows us itBit's trading volume in 2020. Can you guess when they started working with PayPal? Of course, it is when the volume began rapidly picking up towards the end of the year. As a result of this, PayPal is already buying up 70% of the supply of newly mined Bitcoin. The second big buyer is another digital bank, Square. Specifically, people can buy Bitcoin on Square's Cash App. Now, Square also mostly serve retail customers, and you might recognize them from their small payment devices or because they were set up by the CEO of Twitter, Jack Dorsey. They've been allowing customers to buy Bitcoin for some time now, and as of today, Square's Cash App is estimated to be buying around 40% of all newly mined Bitcoin. So if PayPal are buying up 70% of newly mined Bitcoin for their clients, and Square are buying up 40%, that means that between them, they are buying up more than all of the newly mined Bitcoin. Again, both of these companies are just serving the retail investors, people like you and me. That means today, people like us are actually buying more Bitcoin than is being mined. And the third big buyer of Bitcoin is called Grayscale. Grayscale offer a product which buys Bitcoin on behalf of their clients. In fact, this actually trades on the stock market, as we can see here, and is known as the Grayscale Bitcoin Trust. However, while these shares do effectively represent Bitcoin, they are on the stock market, which means that the price is determined by sellers and buyers in the stock market. So in reality, there is often a premium that you pay above the true price of Bitcoin when buying these shares. As of today, there is a 34% premium versus buying Bitcoin directly. Paying 34% for the same thing? I mean, that is a pretty terrible deal, and it makes you wonder why this even exists in the first place, right? Well, the main reason is to serve much larger institutional buyers. So people like you and me, we can sign up to apps like Coinbase or Crypto.com, and we can buy our Bitcoin directly on there. Large institutions who are trying to buy many $1 million worth at one time, though, they don't really have this option. That's why they are okay with paying this premium. And as a result, Grayscale is mostly for the institutions. And if we look at the trading volume for Grayscale's offering, we can see that trading volume has been rising over the course of 2020. So we have 3 main places that are buying Bitcoin right now. PayPal and Square are retail focused, and Grayscale is institutional focused. So I'm going to lay this out and try to make it as simple as possible. To know if anything in the world, Bitcoin included, is going to rise in price, all you really have to do is answer the question, will demand outstrip supply? Will people be buying Bitcoin more than selling it? Now, of course, answering that question is usually quite difficult, but let's try to write it out. So pushing the price of Bitcoin up are buyers from PayPal, Square, and Grayscale. Pushing the price down are the newly mined Bitcoin and existing Bitcoin holders selling their coins. To determine if the price is going higher, you basically just have to decide which side of the equation you think is a higher number. That's supply and demand for you, and it's economics 101. Again, it looks quite simple. It's actually quite hard to determine which one of these sides is going to outweigh That's why it's often so confusing to figure out. But now that we already know that PayPal and Square are buying up all of the newly mined Bitcoin, in fact it's actually 10% more, but let's imagine it's the same for our example. Because we know this, just like in maths, we know that they cancel on both sides. And so from our equation, we can remove them. That ultimately leaves us with this. On one side, we have Grayscale buying Bitcoin, and they are pushing the price up. On the other side, we have existing Bitcoin holders selling, which is pushing the price down. Now we need to figure out which side of the equation is larger than the other. So let's take a look at some data. This chart shows us the total amount of Bitcoin on exchanges since January 2014. When you look back through the data, what you usually find is that when people think Bitcoin is going to crash, they tend to move their Bitcoin onto the exchanges to get ready to sell. When people think Bitcoin is headed higher, they tend to take their Bitcoin off the exchanges because they don't need to sell anytime soon, and they want to keep it in safer storage. So looking at this chart, we can see that there is a clear trend of people moving their coins onto exchanges over time. In 2020, however, this has totally flipped. As shown here, in 2020, the number of Bitcoin on exchanges has been trending downwards. And remarkably, this is the first time that this pattern has continued over the course of an entire year. If we zoom in, we can see this in even more detail. On top of this, 61% of Bitcoin hasn't moved in over a year. Regardless of the data that you look at, one thing seems pretty clear. At these prices, the vast majority of Bitcoin holders do not seem happy to sell. So let's bring our equation back now. We still have Grayscale's buying on one side of the equation, pushing the price higher, and we still have existing Bitcoin holders selling on the other side of the equation, pushing the price lower. Now, looking at the data, it looks to me like the buying strength of Grayscale, which is growing as we know from earlier, is going to outweigh the selling power of existing Bitcoin holders, especially as we know the most Bitcoin are not moving and are instead leaving the exchanges. And if that is correct, then demand is greater than supply, and the only way for the supply to increase is for the price to rise. This is known as a supply shortage. In essence, it means there isn't enough supply to go around. And that's why I describe it as a problem for Bitcoin, but not so much a bad problem, more of a brilliant problem. Also, I've tried to keep things as simple as possible here by saying that there are only 3 buyers of Bitcoin: PayPal, Square, and Grayscale. In reality though, there are other major buyers too. Coinbase, for example, must regularly buy Bitcoin on behalf of their clients. And the same goes for other exchanges that have fiat gateways, allowing people to buy directly on the app or the website. Also, institutions are now beginning to buy Bitcoin directly. MicroStrategy are a publicly traded company in the United States. We can actually see their share price here. They bought $425 million worth of Bitcoin, which is worth now around $800 million. They even announced plans to raise a further $550 million with the intent of buying more Bitcoin, and they have since raised that money very quickly. Now, to tell you the truth, even I think MicroStrategy are a bit crazy at this point, but it has certainly grown their share price, and we can add them to the buying side of the equation too. The British investment fund, Ruffer, which manages £20.3 billion, has invested £550 million into Bitcoin, and that represents just a 2.7% stake of their total assets. A hedge fund known as One River has quietly been buying more than $600 million in cryptocurrencies. Eric Peters, the chief executive officer of One River, said in an interview that he set up a new company to seize on the growing interest of cryptocurrencies among institutional investors. In addition to its initial purchases, One River has commitments that will bring its holdings of Bitcoin and Ether to about $1 billion as of early 2021. On top of that, Guggenheim Partners is a firm who manages $233 billion in assets. Well, this is their chief investment officer talking about their $400,000 price target for Bitcoin.
Scott, Guggenheim has reserved the right to invest up to 10% of its macro fund in Bitcoin. Have you guys started buying yet? And how much is this decision tied to the Fed's extraordinary policy?
Well, to answer the second question, Scarlett, clearly Bitcoin and our interest in Bitcoin is tied to Fed policy. and the rampant money printing that's going on. In terms of our mutual funds, we are not yet effective with the SEC, so we're still waiting. Of course, we made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
Whoa.
So, we're going to, even if we had the ability to do so today, we're going to monitor the market and see how trading goes on valuation, but ultimately look to buy it.
Scott Miner, we want to delay the Fed press conference for this comment by you. How do you frame a 400,000 Bitcoin? How do you get from where we are now out to 400,000? Is it just based on scarcity?
Yeah, right, Tom. It's based on the scarcity and relative valuation, such as things like gold as a percentage of GDP. So, Bitcoin is actually has a lot of the attributes of gold, and at the same time has an unusual value in terms of transactions.
So in reality, we should change the equation. On one side, you have the existing Bitcoin holders, most of whom don't actually appear to want to sell at these prices. On the other side, you have the buying power from every institution in the world who wants to buy into Bitcoin. And listen, I don't expect you to trust me. I'm just a random guy on the internet, right? But please Google the words Bitcoin and institutional buyers. I've said it before and I'm going to say it again. In 2017, regular people like you and me, we were taking Bitcoin seriously while the institutions, they were laughing. Today, institutions are taking Bitcoin seriously while regular people are dismissing it. I've given a few examples here, but there are so many more examples out there as well. At the same time though, as investors, we all have to go down our own paths. You might think totally differently to me, and that's absolutely cool. To tell you the truth, I might be wrong. I am nowhere near arrogant enough to think that just because I think something to be true, that it automatically is. All I'm really trying to do is just lay out my thinking for you as clearly as possible. And I'm going to talk about the optimal strategy for investing in just a moment, the number one way to invest. But first, I just want to say that it's kind of funny because I set up this channel around 3 years ago to specifically talk about cryptocurrency. That was the only topic I talked about. I was there during 2018 and 2019, still banging on about it. But it became kind of an echo chamber. Everyone who was watching was already invested. One of the nice things about making more general content these days is that I get the opportunity to talk about Bitcoin to a more general audience. And because the news talks absolute nonsense about Bitcoin. It's either way too negative or way too positive. I hope that you can enjoy these breakdowns, focusing more on the factual side of things, even if Bitcoin isn't for you. And if you do, by the way, I'll be talking a lot more about Bitcoin, Ethereum, DeFi, and cryptocurrency in general in 2021. So if you are interested in that kind of stuff, make sure to subscribe so you can hear the truth about all of these things. With that said, let's talk about the single best investing strategy you can use when buying Bitcoin. And I'm not gonna lie, it's a really boring one, but it really does work. It's called dollar cost averaging. Dollar cost averaging is when an investor divides up the total amount to be invested across periodic purchases. In other words, you don't buy everything in one large chunk. Instead, you buy slowly and consistently. Each week you commit to buying the same amount in dollar or pound terms and you just buy it consistently. Now, for example, if you bought Bitcoin on the single worst day in 2017 when Bitcoin hit its peak, and you continued buying $100 worth every week since, you would have spent a total of $15,700 in the past 3 years, and you would now have over $40,000 in return. What is quite remarkable here is that this would have actually given you a higher return than if you'd done the same investment into the American stock market, which is shown by the red line. And the same goes with just about any stock market. And remember, this is assuming that you started on the worst possible day. the peak of the 2017 bubble. Dollar cost averaging is nearly always the best strategy you can use. Also, investing for the long term is essential when it comes to Bitcoin. If you're planning to sell within less than at least 3 and ideally 5 years, then Bitcoin is not for you. Bitcoin and the cryptocurrency markets usually move in cycles. If you try to sell before an entire cycle has played out, you're more likely to lose money than to gain money. In other words, the best way to invest is steadily and for the long term, which I know isn't the most fun, and I almost feel a bit bored saying it. But listen, it really does work better than any other way. The best investors in the world, they invest based on facts, not emotions. This is what the facts support. Now, I've talked a lot about Bitcoin recently, and a few of you have been asking what I think about Ethereum. So in an upcoming video, probably early 2021, I'll be doing a proper breakdown and explaining my thoughts. In the meantime, if you don't want to wait that long, go out and buy yourself a copy of this book. It's called The Infinite Machine by Camille Russo, and honestly, you will not find a better book on Ethereum than this. And yes, I did have this book just sat here for the whole video waiting for this moment. I was kind of tempted to do that classic YouTuber move. You know, the one where they just pretend to grab the book from the bookshelf? You know, the wait there a second. There you go. Sorry about that. Took ages to find it. I'm a YouTuber working in finance, so you know, I read like 14 books a day. And I have a pretty huge collection now. Anyway, I hope this video has helped you in some way. Also, I've recently set up my first ever Instagram account. I'm basically like an old man. So if you do want to be one of my first ever followers on there, check out the link in the description. Anyway, I hope you enjoy the holidays and have a great Christmas. I will see you again in the new year.